Today's verse of the day. Genesis chapter 17, verse 7. I will establish my covenant as an everlasting covenant between me and you. God is going to create a promise with you, and that promise is going to not only live through you, but it's going to live through the generations to come after you. You have to create an overly abundant promise to yourself, to your future self, to your future family, and to those who come behind your legacy, that you will show up for yourself, you will show up for your family, you will show up for God, and execute on the things God has intended for you. It's important that you create that promise with God, because God is the only person that will help you get there. Without God, it won't be possible to get to the desired dream. So you have to create that promise with God and create it in a way that exceeds your time here, so that the promise continues on even when you're gone. That's today's verse of the day. With that being said, let's get to the charts. All right, ladies and gents, here we have the Tuesday charts loaded up on the SPY, ticker symbol SPY. So going into the 4-day weekend that we had due to MLK Day on Monday and just the extended weekend, we had some selling pressure come in and it got down to 680 after Trump announced news regarding Greenland and announcing tariffs on EU. So we had a gap down to 680. However, we bounced off 680 in the pre-market, opening around 681 and holding above 681 for the time being. I then looked to take a position after we retested the 681.4 level, taking a quick bounce here from 681 back up to 680.83, where I then took profits and moved on to another position. My second trade that I took on the day was QQQ, ticker symbol QQQ. Loaded up, and we saw some rejections come in at this 615 level up here, and I instantly caught a very nice move initially here, and I also took it here as well. We then saw some failure come back in, but we kept reversing off of the orb high, which was 613.25, and we were failing to get back below that level. However, we were starting to form lower lows, and so from there I then saw it fail and go lower all the way down to 607, but I didn't catch that entire move. Unfortunately, I was done trading by this time. I did, however, catch the back and forth move from 615 to 613. Unfortunately, I wasn't profitable on the day because I took a position back on SPY once again, where I was looking for this similar move, and we were not able to get it, unfortunately. We just kept getting chopped around. Let me look at Tuesday. We kept getting chopped around up here in the same range, as you guys see, from 680, 250 to 680, 84.20. And so initially, ideally, if I took, high of day entry as stop loss, high of day or used high of day as stop loss, I would have been in this position still, because I did get re-entries into this position, but my entries were here once we fell back below the orb, and my entry was also here. So on the second position, I did catch it. However, my first position was not the proper position, because I used more size on the first position than the second position, and ideally you want to use, if not the same size, more size on your confident play. But I wasn't as confident because of how choppy it became, and so I missed out on the entirety of this move to the downside. So it was very unfortunate, and we pretty much ended that day break even. But with that being said, let's move on to Wednesday. Here we have the Wednesday chart loaded up on the QQQ, ticker symbol QQQ, 5-minute time frame. As you guys see here, we had a very, very wide ranging move all the way from 607 back up to 620. Very, very crazy day. Initially starting out Wednesday, we had an initial position here on a reversal of the previous day orb low, which was 613.25, which was seeming to be a pretty convincing level of resistance, since it was such a strong level of demand on Tuesday. I took puts here where we then caught a nice move, solid move to the downside, but it wasn't a strong move that I was looking for. I was looking for more of a failure like we had after breaking the level yesterday, where we then dumped all the way to 607. I wasn't looking for targets of 607, I was more so looking for targets of around 610, but we were unfortunately able to get that level as we started to then follow the trend to the upside and break back above that level. And then from there, we started to just move in a very free-flowing way, and we flowed all the way back to 616. However, for me, I took positions alongside this trade all the way from the 613 level. I saw a resistance there, That was a good entry. We're gonna talk about the entries that weren't as good. So 613 was a good entry. We saw a profit. We didn't get enough profit off it because we held runners. So then I ended up stopping out of my runners. We then looked for a re-entry here at 614. Saw a little bit of profit, but again, I wanted to see it go lower. Unfortunately, we got stopped out again because it trailed right back higher. And so from there, we were just pretty much getting break-even trade after break-even trade, but then we took an L after trying to flip bias and see continued upside after we broke above the previous day low, which was 615, which is also the previous level of resistance. And so I looked for a retest of the 615 level, where we then saw a little bit of upside here. We had some failure here. We saw a little bit of upside back up to 616.50, which wasn't much. It was a 70-cent move from 615.85 to 616.50. We ended up getting stopped out after getting chopped out of this position back and forth, all the way down to 615. I wanted to add size at 615. I didn't see a convincing enough retest to add size. I added size anyway just because my position was already down. That's one of the worst things you can do as a trader, is add size without confirmation. You have to wait for confirmation. And so I didn't wait for confirmation on this particular position, and it ended up failing lower. I did use the candle lows as stop loss, so even in me adding, I knew that this was my absolute stop loss, because if we fell back into this demand zone, we were cooked. And so I used that low as a stop loss. We closed that candle, and then shortly after, like a few seconds after that add, I literally got stopped out of that position. I was like, cool, we're out of it. And we caught it. We stopped out at the perfect time, because as you guys see, it ended up dumping all the way back down to literally the low of day, and then it came back up after that, after Trump released some more news about coming to good terms with Greenland. So very crazy day on Wednesday. Very unfortunate price action. We had the right idea, but we switched bias in the process of, having my idea, which happens as a trader. Sometimes you are confident in a position moving in a certain direction, but you're too early to the position moving in that direction. And when you flip bias on a trend that now you're acknowledging, you're too late to the party because it's already moved so high. So these things happen in trading, unfortunately, as they do. You just have to kind of take the punches with the progress and continue to move forward. And that's what we did moving into Thursday. So let's move on to Thursday. Here we have Avgo, Broadcom, ticker symbol AVGO, 5-minute time frame loaded up. And this was our main focus going into Thursday. Now, semiconductors overall were running really well this week. AMD was the leader for semiconductors. So I was watching two stocks on Thursday after looking at a broad view of what was moving well for the week. And the two names that I saw moving really well were Broadcom and AMD. Now, AMD was retesting resistance, which we'll talk about here shortly, but our first focus was Avgo. And as you guys see here, we had a sharp rejection come in off of the 337 level, going all the way back down to 333, which is actually where I look to take a position. Now, as you see, you'll see my red rectangular zone there, and that is actually a zone of resistance, because as you see, it started to show failure here. And so I looked for a continuation to the downside after forming the orb, and I noticed that we were forming a downtrend after seeing continuous wicks lower and a failure to get back above that 333 level. So I said, cool, I'll just take a position here, and that's what I did. I took a position after we failed to reclaim 333, used 333 as a stop loss, and my targets were about 329. I did take profits around 330, and I took more profits at 329 after using a take profit and limit stop loss position. I just said 329 is my stop loss, and we retested 329. Later in the day, I did catch another position to the downside again after retesting 331, and we caught it from 331 back down to 329. So that was very, very cool. But let's talk about our AMD trade that we took. As you guys see here, AMD was showing weakness initially, but then failed to turn weak essentially. And I think it's just due to the more interest of demand being in the stock, and we just were not able to catch the downside move that I was looking to get. Ideally I was looking to see the 246 and lower rejection happen after failing below 250, because that's our level that we have charted as a level of demand or resistance. So we wanted to see a retest and failure of 250. However, I waited longer than 15 minutes to see the rejections come in, because we failed to retest and fail 250. We actually closed above it at 251. But we then got a retest of 252, and saw a sharp rejection. And from here, I then looked to take a position because I said, okay, cool, we fell back below 250, so let me take a position here because we were feeling an uptrend. And so I took a position after failing this 252 and getting a retest of 251, which is actually right around where the EMA was, which I was also paying attention to. We fell back below the EMA and we fell back below our level of resistance and demand. So after getting that failure confirmation, I looked for the retest, got in at 250.38, which is the high of this candle. Looked for a continuation to the downside, but we was not able to get the continuation. Had a really good average, and I would do this trade over and over again. If we had weakness, this trade definitely would have went down to 246 and more if possible. But we were unfortunate, and we ended up getting wicked out of this position after failing back above that candle high, which was my stop loss. And from there, we just pretty much reclaimed the lows and moved higher into the day. So that was AMD. That was our loss on the day. So we ended up breaking even on that day as well. Some weeks you'll get in the market where you just don't have the right conviction and you don't have the right ideas, or you just might not be taking the right opportunities. And I think that's what it was for me mostly. But with that being said, let's move on to Friday and talk about what we did on Friday. If you guys want more tips and tricks about day trading and investing, make sure to click the link in the bio, www.continuebelief.com. I share a lot of free resources and tools, tips and tricks about how to day trade, how to get started investing, and so much more. So make sure you guys check out the link in the bio. Thank you guys so much. Make sure to leave a like and follow. And yeah, see you guys later. Finally, we have the Friday charts loaded up on AVGO, ticker symbol AVGO, 5-minute time frame. Now, as I saw success on Thursday with this trade, I said, okay, cool, let me see if there's more opportunity going into Friday. And we actually had a little more opportunity coming into Friday because we ended up gapping down in the pre-market, and we were retesting and rejecting a previous level of demand, which was 321.7. In other words, 322 if you want to round it up. And so I looked for a rejection off of this position after we formed our orb levels, and I saw that we failed this zone of 322 to 318, and I also saw that we were doing the same thing we did the day prior, which was forming lower lows. And so we were forming lower lows below this demand zone, previous demand zone, and also rejecting the pre-market low and the EMA. So I had a lot of confluence to this trade, and so with that I said, okay, cool, I'll just take this position looking to get back to the downside of 314. So I got in this position pretty much at the high of these candles of 317.3, using those candle highs and a break above that EMA as a stop loss. I had a very tight risk to reward. I took profits right back down into 315 and kind of went back and forth between that 315 and 317 range. We were getting re-entries and exits on this position, and then we ended up failing and reclaiming the EMA, pushing back higher into 322. I then later caught a position off this 322, rejecting the 322 level, going back down to 319, and it was a really good entry, but we're not able to capitalize and execute as much as I wanted to. I wanted to see that downside, honestly, but we had a lot of runners in most of our position that we re-entered, and so we gave up on a lot of profits, but we did secure most profits. And so that's the thing about trading, is you'll get a lot of trades where sometimes you'll give back gains because you have runners in the position still and you want to see the continuation go, but sometimes the continuation doesn't happen, and sometimes it might even take back some profits, and that's what happened on Friday. So we did end the day green on Friday. Unfortunately, we were not able to end it as green as we wanted to because AVGO didn't get that continuation, but that was the only trade we took on Friday. And so with that being that, we ended out the week, and overall the week that we had was short-lived because we had 4 days trading, and I think my execution this week wasn't as sharply executed as I have been throughout the month of January. So this was probably my weakest week for sure going into this third week of January. My lessons that I did learn were to lock back in, not take trades that did not have quality, because I was taking a lot of trades that I was just kind of shooting like a machine gun and just firing. I had to really sit down, lock in, look into what I was looking at and what trades I was taking, and understand why I was taking these trades. So a few of the trades that I took made sense, but a lot of them didn't. And so next week, that's what we're focusing on, is just getting back to the quality trades that we were taking earlier this month, and reshifting our mind, resetting our mind to those quality trades. So with that being said, let's move on to our predictions for next week. All right, ladies and gents, here we have the 4-hour one day. Let me load up the 4-hour. All right, ladies and gents, here we have the 4-hour charts loaded up on the SPY, ticker symbol SPY. Like I said, this week we had a gap down from last week going into this week after failing and getting a gap down in Tuesday's opening bell. And then we reclaimed 689 for the end of the week. So we were right back pretty much where we left off going into last week. So what can we expect going into next week? What levels can we watch? I think the levels that we can watch going into next week, in my opinion, is going to be that 689 level, or in other words, 690. If we can reclaim 690 and specifically get back above this line here, this falling wedge, we can see a reclaim of this trend and get back higher, going back into possible new all-time highs. However, if we continue to fail below 690, I definitely think we can see back lower. And if we can get down to 680 and fail 680, we can see as low as 670. So the line in the sand is going to be 690, 680, and the level here we have, which is 691.3. If we can get back above that level, we can see higher. We are forming a little bit of a flag on the 4-hour. We're in a very tight consolidation zone as well, so we want to see which way we break out, and depending upon which way we break out, that'll determine how much further we'll go. Now, we do have a lot of earnings coming up for a lot of big tech names like Apple, Meta, Google, Amazon, and so those names reporting could make or break the market movement going into this week. So that's one thing I would say be mindful of. And with that being said, I believe that's everything that I have to say. The level to watch is 690. Our break back above this falling wedge would be 691.30. And then if we fail below 690, we can see back down to 685, 680, and so on and so forth. So those will be the levels to watch. Also keep an eye on those earnings reports and see what names are earning this week and how they're earning. And with that being said, I hope you guys enjoyed this video. Make sure to leave a like, comment, and subscribe. Turn on that notification bell for more videos and more content. And don't forget, on Mondays, we have our podcast, Rich Off Gains, releasing every Monday at 6:30. So thank you guys so much for watching. I'll see you guys in the next one. Peace.